Welcome to Investors Insights. Our topic today is, will the markets keep on trucking? There's a reason we picked that topic. This year has already started off with a lot of news, politics. Congress is coming back. They've got a lot of decisions to make that could impact the economy. Then from the standpoint, the geopolitical environment taking place. But actually in our meeting this morning, you brought up an interesting fact. I've always believed in boots on the ground research.
Yes.
And you did a great job talking about that. Talk to us about the trucking industry.
Well, the economy's doing so well, it's hard to find a truck to ship your stuff.
Okay, go into detail on that.
And the trucking industry tracks that very carefully. And what they're looking at is number of trucks available versus what's being shipped.
Right.
And they track that to see how out of balance or in balance that is
Sure.
with the economy. Economy is doing so well now that across the board for every 12 shipments, doesn't matter what they are, retail type stuff, manufacturing, you got 12 shipments going in the United States, you've only got one truck to handle it.
Sure.
12 to 1. Wow. That's opposed to last year where it was 4 to 1.
Okay.
That's the largest imbalance since Hurricane Katrina. So it's a huge amount, and it's even getting to the point where people are choosing, am I going to pay higher per mile? In the trucking industry, it's up $2.11. That's quite a bit.
Right.
Or if it's not essential, they're just waiting for it to get back in balance.
Yeah.
Absolutely. You just don't see that much.
Right. That's got to be a good leading indicator for you to buy. It's got to be shipped, right?
Exactly.
Well, going back to the boots on the ground, I've always said if you track the trucking industry and the shipments, 120 days, 6 months out, if orders and shipments are picking up, that means the economy's picking up because people are ordering in advance for inventory to have there in the stores or
and you got to move it.
Or supplies. And talking about supplies, you talked about construction. Go into that, Bobby.
Construction spending hit an all-time high in November. And so the construction is really, really strong right now, both commercial and residential. And then also, so as we look for investments in sectors of the economy, construction is looking really good with industrials, especially now that Congress is taking care of tax reform. Now we're looking for the infrastructure bill.
Right.
And so if Congress can pass that, construction and infrastructure offer a very good opportunity for investments.
Well, and there's still that debate, though, about, are the tax cuts already in the market or not in the market?
Right, yeah.
And then if we go towards infrastructure, creating jobs, that could be a huge positive.
You build those roads for those trucks to drive on, build that runway, maybe for the economy to take off. It'd be very interesting. But a lot of people based on those numbers, it may look like the tax bill is already baked into the market.
Right.
Companies in industries, they'll kind of get ready in advance of bills coming through, but the individual, not so much. It's really hard for an individual to plan on taxes. And what's fascinating is, and I think it would have been pretty hard to predict this, but nearly 1 million employees are expected to get a one-time bonus thanks to the tax bill. That's something that no one could have planned on or spent on. Add to that the IRS finally announced that in February, they will automatically adjust the taxes they take out of your paycheck automatically to reflect the new taxes. So everyone should look at their early February paycheck. You'll see it likely will have a little bit of cushion in it because of the change. That'll be done automatically. That's kind of things that builds in some consumer cushion to kind of push this thing along.
And that word individual translates into consumer.
That's right.
Spending extra money doing some things that they've been wanting to do for some time.
Buy something, ship something,
or invest something into the market.
That's right. Yep. You got extra. You have a little extra savings. That money can go into your 401k markets. It kind of rises prices.
Sure.
And then also, what we're going to see maybe some negative news, but it's because of a positive reason from companies coming out, is the repatriation tax.
Yeah, talk about that.
What that is if companies have cash overseas, before the tax bill, if they brought it back, they'd have to pay the top marginal tax rate, 35%.
Right.
It's been reduced to a one-time tax of around 15%. But when companies bring that back, they still have to pay taxes on it.
Yeah.
And so what they're doing is they're pulling forward deferred taxes, and a lot of companies will announce that as a loss. But really, they've got billions of dollars now to spend on bonuses, to spend on buying equipment, to spend on, reinvesting in their corporations.
So what you're saying is, in the news media, when our clients either hear or read that this company took a loss in fourth quarter, a lot of that has to do with the taxes they went on and paid.
They went on and paid it. They were going to have to pay it anyways, and now it's at a lower rate, and now they have money to use.
Right. Yeah. To reinvest in their companies, hire more employees, give out bonuses, innovation. New products, buying more trucks, correct? So on that note, we want to keep you updated. This is the kind of information we're looking at, that regardless of geopolitically and other things that are taking place in the news, that we're looking for, that drive earnings, which in turn can have a huge impact on the economy and the market. Continue to follow us on Facebook, Twitter, and LinkedIn. We hope you have a great week, and we're looking forward to a positive year, and we want the very best for each and every one of you watching today. Thanks again. We'll be in touch.